Okay, now this is the second discussion of the July 2021 examination paper lamai, and since I have done the question 2 in the section 1 discussion, section 1 question 2, now this is the second discussion with the section 1 question 1, which is if I have analyzed the question, when the introduction part I have done it, I will quickly come to that. This is amalgamating of the non-resident and the international taxation, as well as the taxation and the business decision making. Both area amalgamated, the taxation and business decision making, the evaluation of the option, one of the common way of the testing. It has tested for the 6 marks and the balance marks from the 25, then the balance marks goes to the non-resident and international taxation. Okay, then this is the approach of the section 1 question 1, and I need to tell this the non-resident and international taxation question, one of the easy question for students. Then this kind of the question you can easily gather marks, not a complicated question. It's very clearly ask the requirements and you have to write a very clear answer. Okay, then we will come to the 3 requirements of the question. This is section 1 question 1 part A. There are 2 parts, part A and part B. Part B is for the taxation and business decision making. Part A is for the non-resident and international taxation, which is looking for a PE based question and answer. Okay, the tested double taxation treaty is Sri Lanka and India. Part 1 on part A, Roman 1 requirement, which is discussion of income tax liability, explaining the concept of PE. There are 2 models given, the 2 alternative models given to conduct the business in Sri Lanka with reference to non-resident person. Then based on that 2 models, Lama, you have to check whether there is a PE or not. If there is a PE, let me, besides the question, let me come to this. If there is a now PE, if there is a PE, yes. If there is a PE, no. If in this situation, if there is a PE, what is the condition? The business income you should have to compute, business income attributable to the permanent establishment. And if there is no PE, you don't have to calculate the business income on that particular transactions. Then this is the key thing tested. Again, if there is a DTA between Sri Lanka and the relevant country, how you should write your answer? Your answer should be you need to explain the provisions of the Inland Revenue Act, as well as you should need to tell the provisions of the double taxation treaty, double taxation avoidance agreement, and your final conclusion shall be provided based on the double taxation treaty. Because why? Under section 75 subsection 2, it has very clearly provided where the double taxation treaty with the 2 countries, then the provisions of the treaty will continue to enforce, will supersede the Inland Revenue Act. Then this has tested in this question by evaluating 2 different models. Okay, that's the part in a part A, Roman 1. In a part B, Roman 3, for now that analysis is for 12 marks, and for this one, computation of tax liability applicable to non-resident person, including the remittance tax. Why we need to compute remittance tax? Since there is the profit remitted to the that particular the country, or from profit retained to remit in Sri Lanka with reference to that the head office. Okay, then based on the analysis which you have done in the part 1, you have to finalize your answer. You have to finalize your answer. That's only for the 3 marks. The entire calculation is based on what is the analysis you are doing in the part Roman 1, which reference to the permanent establishment or not. Then next one, withholding tax provisions applicable to service fee for the 4 marks. This question is rapidly tested. If you have seen the past papers, even this curriculum and previous, this has tested regularly. Then this is one of the common question to you all, and you should write again the answer in this manner: the Inland Revenue Act provision, DTA provision, and you need to conclude with the double taxation treaty agreement. Clear? Then this is for the 15-19 marks. And the second part of the question, which is talking about the taxation and business decision making, the part B for the 6 marks. It has given the, which is assessing the options with reference to individual. The individual taxation has tested by evaluating the option, then tested assessable income from employment, the 2 situations given under assessable income from employment. Then under that 2 situations, you need to evaluate whether what option is the most benefited option to the taxpayer, and you have to provide your recommendation. This is the question. Then we will start from the discussion of the question with the paper. Then this is the question 1. Now come to the requirements again. In here, first one, assume that you are the tax advisor. You are the tax advisor of the Seiki India approach in May 2020. Okay. Analyze the Roman 1. Analyze the permanent establishment PE exposure for Seiki India in Sri Lanka per Article 5 of the double taxation agreement between Sri Lanka and India. See Lamai, it has very clearly provided the you should analyze your answer as per the Article 5 of the double tax agreement between Sri Lanka and India under the alternative business models, the illustrated above. In the question, then you can understand when reading the requirement, there are illustrations for the models given. Based on that model, you have to analyze that each model based on the Article 5 of the double tax avoidance agreement. In the paper, Article 5 has given for your reference. Clear? Further, discuss whether Seiki India is liable to income tax in Sri Lanka in respect of. Now you have to discuss. See, in this question, there is an analysis whether you have to mention there is a PE or not under this model, and based on that Lama, you have to tell the whether the Seiki India is liable to pay income tax in Sri Lanka or not. Then this one you have to tell. The 2 options are there. Any profits arising from the lease or sale of construction, lease or sale of construction machinery to customers in Sri Lanka. This is one option, which is that any profit arising from the sale or lease of construction machinery to customers in Sri Lanka. Second option, any profit on the supply of support services to customers in Sri Lanka. The 2 options given, under these 2 options, based on the question, the illustration models are given. Based on that illustration models, under these 2 categories of services, you need to look at whether the India, the Seiki India is creating a permanent establishment or not as per the provisions of the double taxation agreement between Sri Lanka and India. And again it has given, after 1 and 2, it has given support your answer, see it in the provisions of the Inland Revenue Act and the double taxation treaty. Both you have to amalgamate in, and you have to write the answer for the 12 marks. Answer for the 12 marks. Then Lamai, come to the, before come to the facts of the question, I need to go for the PPT. In this, come to this one, this is analysis of the question 1, the Roman 1. Then the action verb is analyze. This is tier 4, the analysis. What is the meaning of the analysis? Examine in detail in order to determine the solution or outcome. That's mean what, Lamai? In this you have to provide a conclusion. You have to provide a conclusion on your decision. You have to tell whether this is PE or not, whether this liable to income tax or not. The recommendation you should provide. In the second context, it's a discuss. Tier 2, the comprehension, under the comprehension of the action verbs, that tier, the discussion is there. What's the meaning of the discuss? Examine in detail by argument, showing different aspects of the purpose of arriving at a conclusion. Then again, you have to argue with the given information and the provisions of the Inland Revenue Act and the Double Taxation Treaty, and you need to provide the conclusion. This is now in a one, the requirement, there are 2 action verbs by elaborating 2 different perspectives. Okay, how you are going to come to your answer, then after reading the facts of the question, I will again come to this. Then again I am going to the paper. This is the paper. I am not going to the Roman 2 and Roman 3 now. I need to come for the, anyway Roman 2 for the income tax liability and the Roman 3 is for the taxation and business, the Part B is for taxation and business decision making. Part A, Roman 3 is for that consultancy services. Come for the question. Let me analyze the question with you all. Okay. Then, Seiki India Limited, the Seiki India is a listed company based in India whose principal activity is the sale of construction machinery. In the last couple of years, the Seiki India has ventured into selling products in a few countries in Asia through distributors in those countries. Considering the past success of the aforementioned venture, Seiki India decided to expand its business to Sri Lanka commencing from November 2020. Seiki India does not have any legal presence in Sri Lanka. Now let me analyze the first paragraph which it has given. This is the analysis part. The Seiki India, this is S in, I will take it as a S India Limited. This is listed company. This is listed company. Then Lamai, you need to look at one thing. You need to look at one thing since it is listed company. What you should look at? The shareholding. If this is a listed company, then the double taxation treaty is between Sri Lanka and India. Then since this is listed company, you need to look at, is this Indian company or not? Because the treaty provisions, the relief from the double taxation treaty is available to the 2 countries, which is Sri Lanka and India. Then here, since it is listed, it's an additional point, you need to look at that one also. We will read the question and let we look at, okay. This is S India, this is listed company, and this is in India. Anywhere this is a non-resident. This is non-resident company or non-resident person. This is non-resident company. This is the first thing. And after that, what happened? For their business expansion, they are coming to Sri Lanka in from November 2020. What's their purpose? The expansion of the business. The expansion of the business. Expansion of the business, they are coming to Sri Lanka. Then, what's the important point? No legal presence. No legal presence. No legal presence by them. Okay. Then, what your position? You are the tax advisor and you have to look at all these angles when it comes to taxation. This is the first part of it. And what's their principal business activity, Lamai? In the principal business activity of, I will take it here, this is the principal or a main business activity. Main business activity, it has very clearly given, it's a sale of construction machinery. Sale of construction machinery. Done. This is the information from the first paragraph. It has given listed company, and for this one, India listed company, it has given the listed principal business. It's a listed company based in India. Listed and it's based in India, then we can assume that it is the company, the shareholders also in India. That means we can use the double taxation treaty model in between Sri Lanka and India for this company. Then prior to commencing the operations in Sri Lanka, in May 2020, Siki India approached a tax advisor in Sri Lanka in order to ascertain whether they should operate based on a lease model. There are two models, lease model or sale model. Two models are given. You are the tax advisor, you have to evaluate that too. The following information was shared at the initial meeting held in May 2020. Seiki India will be importing goods from Seiki Japan, fellow subsidiary, and supplying them to customers in Sri Lanka through either of the alternative models highlighted below. Now, what's my business? Sale of construction machinery. Then I am importing, I am the Indian company, I am importing the machineries from the Japan and based in India. There are two models. According to that two models, I am going to export that machineries to Sri Lanka. What are these two models? First one is a lease model. Let me take these two models separately. These are the operation methods. Operation methods. There are two operation methods. Two operation methods. One is the lease model, which is M1, model 1, and the second one is the sale model, which is model 2. Model 2. Now we will come to these facts. The lease model, there is a Seiki Japan, it is imported into Seiki India, and India is with the profit lease of the machinery to customers. This is the steady way that the machinery, the sale of construction machinery is going. The information has provided in the bullet points. Seiki India will import the machineries from the Seiki Japan. Now, India directly importing machineries from the Japan. Done. Second one, contract negotiations with the customers in Sri Lanka will take place remotely from India. The contract, the agreement with the Sri Lankan, the customers, it's happening in India. Seiki India will lease the goods to the customers under an operating lease agreement, during which the responsibility and control of the machinery would be with the customers. Now what is only thing that Seiki India is doing Sri Lanka? They are directly exporting their machinery to Sri Lanka. From Seiki Japan, it's coming to India. From India, India exporting it to Sri Lanka. And the direct contract is entered in Sri Lanka and India at India. Then last one, after lease out that machinery is under operating lease agreement, that machinery, anything happen to its responsibility and control should goes to Sri Lanka, that particular customer. None of things handling by the Indian company. Come to the analysis of the lease model. First one is direct export to Sri Lanka. Direct export to Sri Lanka. Machineries directly export to Sri Lanka. And second one, contract sign in India. Contract sign in India. The third one, no involvement. No involvement on responsibilities of the machines. Responsibilities of machines. This is the model. Then here let me analyze the question and then we apply it to the PE thing. Then sale model. What happened in the sale model? Seiki Japan is there, again same thing. From the Japan, it is imported to the India. India will, there is a distributor. Then India will export to its to distributor, and the distributor is selling to the customer, as well as the Seiki India is selling to the customer, and this is the approach. Okay. Now come, what are the features on it? The distributor in Sri Lanka will introduce customers to Seiki India and facilitate any flow of information. There is a distributor, he is facilitating information, okay, there is a construction machinery like this, that's only his part. Secondly, contract negotiations with the customers in Sri Lanka will take place remotely from India. It is all the contracts, the agreement with the customers will happen in India. That's the second thing. Third thing, once the orders are placed, Seiki India will import the machinery from the Seiki Japan and export to Sri Lanka. Who is doing the contract? The Indian company, the same company, this same company, like in the previous model, they are importing the machinery from the Japan and its export to Sri Lanka, the particular requested customers. The Seiki India will sell goods directly to the customers. It's very clearly given, directly to the customers, and the invoice will be raised by Seiki India to the customers. Then everything doing by this Indian company. Then the distributor will get a commission from the Seiki India for orders placed by customers with Seiki India through the introduction made by the distributor. Now, this is the second model, which is sale of the machinery. This is the lease model, lease and operating lease, and this is the sale model, selling of the machinery. What are the special features on this, Lamai? This is, there is a distributor only doing the introduction to customers, intro to customers, by telling that there is this kind of a machinery. And second one, Lamai, the contract negotiations will be conducted in India. Direct export from India like a previous model. Direct export from India. and there is the profit arrangement and direct export from India, and transaction happen in India, invoice is in India. The invoice is done by India and the yes, invoice in India. This is the features of the second model. Okay, done. Now we are having the two models. After that, the projections for the year of assessment 2021 are as follows. We are starting from the 2020 November. Number of machineries leased or sold. There is a number of machineries. This is not the US dollar or the currency value. This is number of machinery. Altogether up to 31st March 2021, there is a 1325. The construction equipment supplied by Seiki India requires certain support services. Now, if I have again visit to the requirement of the question, you can see the one is you have to tell any profit arising from the lease or sale of the construction machinery in Sri Lanka. There is a PE or not, you have to tell it. And second one, any profit of the supply of support services. Now first part we have analyzed. Now we need to come for the second part. Anyway, I will erase this part. Then as a continuation of this operation method, under two options, I am coming to here. This two. Then operation method, I am this same chart going forward. This is for model 1 and this is for model 2. Okay. Now we will come to the support services. Under the lease model, which is model 1, such support services will not be provided by Seiki India. None of the support, it has given Lamai, see, ultimate responsibility is with the customer. Instead, a few independent dealers in Sri Lanka will be nominated by Seiki India. In a model 1, this is a service part, supply of service or a support service. In that, what happened? The independent dealers will do the service, will perform the service. It has nominated by the Seiki India. And then who leases or sells similar machinery and provides support services. Their main business, these independent dealers, their main business is they are in the support service business. Their principal business activity is providing of support services. Then that's why they are independent agent, not on behalf of the Seiki India. They are doing their independent business. In that independent business, they are also doing this one. Then from whom the customers could obtain such services. The independent dealer will charge a fee of $7 from the customers of such services. What's the price? They are charging the price of the customer is a USD7. That's the information of the support service will from the under model 1. Now we will come to the support service under model 2. Under the same model 2, such services will be provided through a distributor. Here again the support service part. Now in the support service part, for model 2, which is sales model, it has provided by the distributor as described. Distributor, and then the distributor would provide the services to the customers and Seiki India would reimburse the distributor. the distributor would provide the services to the customers and Seiki India would reimburse the distributor. What is the value of reimbursement? Cost plus 5% markup. Cost plus 5% markup at $6. What is the reimbursement? Reimbursement is a cost plus 5%, which is $6. Any of the support service cost which has been incurred by the distributor is reimbursing by the Seiki India to them at a cost plus the 5% markup, then the $7. The fee charged from the customer for the same will be $7. Now the distributor is charging the price from the customers like this. Price from invoice value is $7. Now there is a $1 profit. The distributor will be provided the detailed instructions and manuals to provide the support services and will be prohibited from providing, prohibited from providing these services, prohibited from providing these services to other customers in Sri Lanka. This distributor can provide this kind of services only for customers, the Seiki S Limited customers only. S Limited customers, this distributor only provides services, only provide supporting services. Okay, Lamai, my part has done. Now, what I have done, I have analyzed the question by given all the scenarios, taken into the facts. Now, this is the facts from the question. Now, what you have to do, you have to apply the theory part for the given scenario. Apply the theory part for the given scenario. Now, what is our key thing? We need to look at whether under this model there is a PE or not. There is a PE or not. Now, each model you have to analyze. Now, I am starting from the lease model M1. Before that, Lamai, I am referring to the Sri Lanka India treaty, in that the article 5. Come to this. Article 5 of the Sri Lanka and India treaty. Okay? Now, what is that? Article 5, permanent establishment. For the purpose of this agreement, the term permanent establishment means a fixed place of the business through which the business of an enterprise is wholly or partly carried out. Now, I am applying one by one to these models. First one, lease model. It is direct export to Sri Lanka, contract signed in India, no involvement or responsibilities of the machines by India. Now, my questions is there is a fixed base. Now, I am analyzing since there is a space here, I will take to this one, the analysis of the PE. Okay, is there is a the fix, it's given it's a for the purpose of this agreement, the term permanent establishment means what, Lamai? Fixed place of business. Is there is a fixed place of business? Fixed place of, I will take, it's a PE. This is the article 5, PE article 5. In that, this is the one. Done. There is there a fixed place of business? Answer is no. There is no fixed place of business under the model 1. Then next one, the term permanent establishment includes specifically a place of management, branch, an office, factory, workshop, mine and oil or gas well or quarry, or any other place of the extraction of natural resources, the farm, plantation or other place where agriculture, forestry, plantation or related activities are carried on a sales outlet, a warehouse in relation to a person providing a storage facility. Anything under part 2, paragraph 2, anything satisfy for lease model 1? Nothing. Second paragraph, which is the list, it's not satisfied, no PE, done. Then the third one, a building site, construction, installation, no assembly project or a drilling rig or supervisory activities in connection therewith constitute a permanent establishment only if such site, project or activities last more than 183 days. Is that 3A satisfied? This is 3A satisfied? No. Not satisfied. 3B, the furnish of services including consultancy services by an enterprise to employee or other personnel engaged by the enterprise for such purpose constitute a permanent establishment, but only where activities of that nature continue for the same or connected period within the contracting estate for a period or periods aggregate more than 90 days. Anything like this, Lama, in the furnishing of services here? No, even this third one, no involvement in the responsibilities of the machinery. Even 3B not satisfied. 3B not satisfied. Now I am applying the treaty model. Fourth one, permanent establishment shall be deemed not, I am not coming to that one. And there is a independent situation and a dependent situation, none of them is satisfied for the part A. Then I am concluding, Lamai, for the lease model, model 1, for that I am not coming to service part yet. For this one, the no PE, you can see the analysis. For this one, there is no PE, therefore business income shall not be taxed in Sri Lanka under model 1. Clear? Now I will come to the next one. I will come to the next one, which is the sale model, which is a sale model like the same thing I am doing. There is a distributor only introducing the customers, contract negotiation in India, direct export from India, invoicing from India. Okay, I am again coming here, the same thing, fixed place of business for sale model M2, no. Now this is for sale model, how can it take, no. In the black I will take, this is a fixed sale model, no fixed PE. Second one, that the branch office or management, for this one, no. Second one also no. Third one, which is going for the construction site or anything, nothing in here. B, A and B, the service provision not applicable, not applicable. Then Lamai, even in the model 1 and model 2, which is sale model, no PE, no PE. Therefore, no business income will be taxed in Sri Lanka, which is if you need to compute the business income, it should be attributable to the permanent establishment. Is it difficult? Then only thing you have to analyze the question well, nothing other than that. Now we will come to this one, my service part. Is this create a PE? No. Why? This is a provision of service. If it is a provision of service, what we can go, the furnishing of services, the building consultancy services by an enterprise to employees or other personnel engaged, and it has given if there is a 90 days. But I come to this one, the paragraph 5, yes, notwithstanding the provisions of paragraph 1 and 2, where a person other than an agent of an independent status, the whom paragraph 7 applies, is acting in a contracting state on behalf of an enterprise of the other contracting state, that enterprise shall deem to have a permanent establishment in the first mentioned contracting state in respect of any activities within the person undertaking for the enterprise, if such person, come to here, the situations are given, but if it is in the independent status, if the agent is in the independent status, then this is not creating a PE. This is their normal business. They are not acting on behalf of the SEIC India. Therefore, Lamai, even for this service PE part, since they are independent dealers, they are independent dealers, therefore the no PE. Why? No PE under Article 5. They are independent dealers. Independent dealers. They are not creating a PE. Not creating a PE. Done. Then all three, 1, 2, 3, no PEs. Now we will come to the support services part under sale model. There is a particular distributor. The SEIC India is reimbursing whichever the expenses incurred on behalf of the SEIC India, the $6. The pricing is $7. This is the very important thing, Lamai. This distributor shall not work other than the SEIC India. They should do all these things on behalf of the SEIC India only. All the manuals and every guidelines are provided. Therefore, this creating a PE. This support the service part, this service PE, this is creating a PE. There is a PE. How? The service PE. The service PE. We need to look at that. What is a service PE? When it comes to the Article 5, Lamai, it has very clearly provided the paragraph 3b, the furnishing of services including consultancy services by an enterprise to, this is service support services on the sale of machinery. Then by an enterprise to employees or other personnel. This is the other personnel, a distributor. The other personnel which has engaged by the enterprise for such purpose. Why? It's very clearly given this distributor has engaged on SEIC India. Why? It has very clearly given they cannot do anything other than this. And for such purpose constitute a PE, but only where the activities of the nature continue for the same the connected period within the contracting state for the period or periods aggregate more than 90 days. Now, you need to look at for this service PE 90 days requirement. Where we have started, Lamai? We have started on November 2020. Till this goes 31st March 2021. Till it goes to 31st March 2021. Now, November, December, January, February, March, there are 5 months. Definitely it exceeding the 90 days of the provision. Clear? This is the analysis of the PE, Lamai. Only under this support service part under model 2, which is sale model, only there is PE. Sale model only there is PE. Now, are you going for a dependent agent? You can, Lamai, but very strongly we can go for a service PE under paragraph 3b. Then because it has very clearly given or other personnel engage. Here it has very clearly given the only this distributor can act on behalf of the Only the SEIC India. Like lamai, like in the dependent agent concept, this has not given this the agent is taking the orders and displaying these things and the delivering, none of information has given. Then strongly you can go for the service PE before go for the dependent agent PE. Because this is a personnel who appointed only for the support services. This is not talking about the before go for the dependent agent, you can apply the service PE very clearly under Article 5. I think I have cleared that. Okay. Now, this is the entire discussion of the answer. I need only this. I am not going to discuss the detailed answer. If you have done this in your examination, then the 12 marks, it's available to you. You need to first analyze the question, and after that you have to tell to the examiner due to these scenario. Now you have first the analysis part, first requirement. Second, you have to discuss, you have to tell the examiner this is based on these things, the argument plus and minus, then this is not the PE, based on this is not the PE. Due to having the independent status, this is not the PE. Due to having a service PE, the more than 90 days, with starting from the November 2020 with the 31st March 2021 by selling 1,325 odd machineries, then this creates a PE with the distributor which is directly only appointed for the activities or support service activities of the SEIC India. This is the analysis. Then it's in the Article 5, I have read it. Then come for the paper again. It is the US dollar rate has given, then 200, all the amounts are given in the US dollars, you have to convert it to LKR, and here the support your answer seat in statutory provisions of the Inland Revenue Act and the Double Taxation Treaty. Now I have fully applied the Double Taxation Treaty. What you should take from the Inland Revenue Act for your answer, Lamai, before going for anything, like I have done in first place, the first thing is you have to recognize whether it's a non-resident person. You have to recognize it first whether the SEIC India is a non-resident. Yes. Secondly, if there is a non-resident person from the Inland Revenue Act, you have to write, since he is a non-resident, the company is a non-resident, the assessable income. Assessable income of the non-resident person, the income arising in the source principle. Source principle under the assessable income, you should write the income arising in or derived from Sri Lanka only will be taxed in Sri Lanka. Clear? Then after that, you can come for under Inland Revenue Act section 73, it's a subsection M. They're talking about the permanent establishment, profit attributable to the permanent establishment will be, the business income will be taxed in Sri Lanka. Don't go for a permanent establishment definition in the Inland Revenue Act. Why? Because in the paper it has given, you should analyze the PE based on Article 5. PE එක analyze කරන්න එපා Inland Revenue Act එකට. It's not according to the requirement of the question. Okay. Then assessable income, you have to tell source principle, the world income and the source of payment. Section 73M is talking about the source of payment under the profit attributable to the permanent establishment should be taxed in Sri Lanka. That's all. That's all. Then you can write these things, and after that analyze as introduction and analyze the entire question and write your conclusion with the analysis part and the discussion part. This is the entire discussion for that. Then I am coming to the, I am not giving detailed answers now. Please go through the suggested solution because the detailed answers are there, but I need for you to do this in the examination. nothing other than anything. මේක දන්නේ නැතුව answer එක 100 පාරක් කියුවත් වැඩක් වෙන්නේ නැහැ. Then you have to apply this logically, analyze it logically, and then write a good answer. The practice of writing you have to do. Then next one, for the 3 marks, based on analysis in 1, what we have done, compute the income tax liability of Seiki India in Sri Lanka for the year of assessment 2021, including the remittance tax, if any, under the alternative business models illustrated above. Now, only the PE creates in the model 2 support services part. In that, there is a price of $7, cost of the $6 for the Seiki India. You need to compute the income tax liability of the Seiki India from the PE. There is a profit from $1. Then the quantity has given how much? The quantity of this 1,325. Then into 1, there is a revenue of 1,325. It is a revenue and it's a net income or a net profit after deducting this after deducting the 7 minus 6, the reimbursement cost. Then there is a 1,325 of the accounting profit, no tax adjustment. Then we have to compute the income tax liability. It also I have taken from this analysis, not without reading the question, I have came to this and done. Now come to that part, which is the income tax computation. Before that, again come into the PowerPoint presentation, which as I have promised, now come to this coverage of your answer on this 12 marks. For 12 marks, Lamai, it's how many minutes? 21.6 minutes are there. Then you need to look at the coverage of the answer. You need to look at the coverage of the answer. How are you going to cover the answer? It should be explain the assessable income of a non-resident person. It's the first thing. First you have recognized as a non-resident person, then explain the assessable income of a non-resident person. That's the base. That's the base. That's why we are computing all. That's why that section 73 applies for us. Then it's coming under this plus this, and then analyze the PE position as per the DTA between Sri Lanka and India by applying the given information about the 2 models. This is the most critical part. If you have not done this in the examination, Lamai, it's in vain. It's in vain. This is the most critical part which you have to do. Okay, then I am very clearly mentioned, it should be in DTA between Sri Lanka and India. Don't go and apply for the provisions of the Inland Revenue Act. It has not passed. The conclusion of whether PE or not, and thereby liable to pay income tax or not. First thing you have to tell, there is a PE, if there is a PE or not. That's the first thing. Secondly, liability of income tax. That's why I have taken no PE, no business income, no income tax, no PE, no business income, no income tax, no PE, no business income, no income tax. Here there is a PE, there is a business income, there is a income tax. Okay. Now it is the part A, Roman 1 discussion for the 12 marks. I think it's clear. Without giving a detailed answer format and the approach to the question and the particular double taxation treaty, all things I have discussed with you. Now we will come to the question which is it has asked computation of income tax liability by Seiki India in Sri Lanka for year of assessment 2021, including the remittance tax. Now again for the 3 marks there are 2 requirements. One is you should need to compute the income tax liability of the Seiki India on Sri Lankan operations under this support service. Secondly, Lama, you should compute remittance tax. The 3 marks awarded for the both. Don't only compute the income tax liability and finish off and go for the next one. Go for the remittance tax and you have to do that calculation. Also, this amalgamating or a summation of the income tax liability plus remittent tax is your total income tax liability with attributable to the permanent establishment by a non-resident person. Come to the answer. Here the computation. Here the computation. Seiki India Limited, Sri Lanka Business Operations, TIN number, income tax computation for the year of assessment 2021, your concerned year of assessment. Under model 2, support services. Under model 2, support services. මේ හතරටම අපිට එන්නේ නැහැ. Then all the, now you should in very particular in the answer, the currencies are given in the US dollars, and finally you have to take your answer to the, LKR. Don't forget that. Then income from support services, rupees 7, this one. Income from expenses or reimbursement expenses, 6, it's given in the question. Then net income per selling of per machinery, this is a sale model. Selling of per machinery income is US dollar 1. Then total net income or profit is the number of machineries in the question. It has given there are this is the table, 1325 machineries were sold. Now here it's a multiple by 1, then the US dollar 1325. This is the net income. Any adjustment for the taxation, allowable, disallowable, we don't have any adjustment, no qualifying payments, nothing. Then this is, I have taken as the assessable income or taxable income both. This is because for taxation purposes we cannot go for the net profit or a net income. We should need to go by the assessable income and the taxable income. This is from assessable income from business, then assessable income or business income, it's the same. No, the meanwhile no adjustments to the business income to total assessable income and assessable income to taxable income, no adjustments, which deductions from AI we don't have. Then tax on taxable income at the rate of 24%. Now Lamai, you all know the tax rates were changed with effective from 1st January 2020. Then normal income tax rate is a 24%. Now you can see what's their industry. They are in the the import and selling and the import and selling of the construction machinery. In our this tax part, the sale model. Anyway, they are doing lease model also, but for our case, it's a sale model, the import and selling of the machinery and providing support services. Then no concessionary rates are applicable. We cannot go by the small and medium enterprise rate because they are Seiki India is a person not solely doing the business in Sri Lanka, then therefore SME shall not apply. For services doing in Sri Lanka, concessions are not there. Then the normal tax rate of 24% as per the first schedule you should apply. Then normal tax rate of 24% on the taxable income. This is tax on taxable income, which is my income tax liability. For this 24%, it is 318. Tax on remittances. How are you going to compute tax on remittance? It is always accounting profit before tax minus income tax which you should pay in Sri Lanka, then balance is subject to remit. Don't go and remit the tax profit. We are not remitting the tax profit, we are remitting what the available profit to us to remit. In income statement is profit before tax minus income tax paid in a domestic, that Sri Lanka, what is income tax paid. Then the net income or a net profit for us 1325 Lamai, this is net profit. This is the, I will take it as a profit before tax, profit before tax. In the accounting terms, I have in many times I have mentioned this. then it is in the accounting terms 1325. Tax paid in Sri Lanka at the 24%, 318. Then on that profit included profit to the remittance tax also. A profit එකට 14 නෙමෙයි අපි remit කරන්නේ, that profit include the remittance tax. Then you have to take it from the base 114 into 14. Then this is the answer, 1325 minus 318, which income tax liability in Sri Lanka, and the particular answer divided by 114 and the multiple by the 14. The 14 income tax rate is given in the section 62 and the first schedule para 9 as the 14%, which reference to the remittance tax. Done. Then this is a 2 income tax liability in Sri Lanka with reference to Seiki, India. Total income tax liability is summation of remittance tax and the local tax payable in Sri Lanka. And then this is in US dollars. The question paper itself, Lama, you can see the $1 equal to US dollar, $1 equal to LKR 200, it has given. Then you need to apply that here and finalize your answer. For 3 marks, Lama, all of you all can grant these marks, and when compared to the previous questions on the non-resident taxation, this is one of the very practical, and for student side, this is one of the good question to you all. Okay? Then good question to pass the exam. Then this is the end of the discussion of that Roman 1 and Roman 2. Now we will come to the next one, Lamai, the service model, the services provided by the non-resident person. What are the withholding tax provisions applicable? What are the withholding tax provisions applicable under the third one? Come to this one. In addition to support services, Seiki India may provide consultancy services relevant to technical services to customers in Sri Lanka. They are providing consultancy services on technical support. Not anything not covered under these 2 models. This is separate one. Then customers in Sri Lanka from offshore, for which a separate fee would be charged. From offshore, by being in their countries, they are providing these services to customers in Sri Lanka, and a separate fee would be charged. There is no PE anyway. Then you need to write what explain the withholding tax provisions relating to the remittance of such fees in accordance with the, now see, Inland Revenue Act and the double taxation treaty between Sri Lanka and India. Lamai, it is criminal offence if you have not tried the provisions of the Inland Revenue Act plus provisions of the DTA, because examiner very clearly asked that too. එකකට විතරක් උත්තර ලියලා you are not receiving the full marks of 4. Then there are questions and you are having sub requirements in the question. The sub requirement for you to answer. Then when reading the first day, I have read the examiner's comments with you all. In here it's very clearly given. The student, most of the students are not right for the 2 parts. Then the reading the question and answering the sub requirements is critical for your examination. Then come to the analysis of the service fee. Again, I am not going to give a detailed answer, but I need to analyze these areas. Okay, this is the question 1 Roman 3. Question 1 Roman 3. The WHT provisions applicable to service fee. This is the This is the requirement you need to go. Now under the Inland Revenue Act as well as per the double taxation treaty. Now the two things you have to tell: WST provisions under Inland Revenue Act, WST provisions under DTA between Sri Lanka and India. Okay. Now before go for anything, I need to go for a double taxation treaty between Sri Lanka and India. See, there is article 7, if not mistake, sorry, it's article 7 is a business profit, and there is a separate article for the technical. See, article 12 is for the royalties and fees for technical services. The same as our thing, our one is the provision of the technical service. Provision of the technical service. Then come to here. Here I am coming to the second paragraph. However, such royalties or fees for technical services here may also be taxed in the contracting state in which they arise. What is the contracting state in which they arise? Sri Lanka. The source principle arising in or derived from Sri Lanka, this technical fee has arisen in Sri Lanka. Then we have to pay tax in Sri Lanka, but how? And according to the laws of that state, then but if the benefit owner of the royalties or fees for technical services, that means take India, is a resident of other contracting state, the tax or charge shall not exceed 10% of the gross amount of the technical service fee. See, the percentage in the double taxation treaty is the 10%. Then the definition of the technical service fee, it has very clearly given in the double taxation treaty. You have to write these things. You have to write these things. Now how the answer going to come? It's on the double taxation treaty. Now what are the provisions in the Inland Revenue Act? What are the provisions in the Inland Revenue Act? First thing, Lamai, in the Inland Revenue Act, you have to look at whether this technical service fee is a source of payment. Whether this is, now you all know the non-resident person and everything, no, you need to look at the source of payment. Source of payment, under the source of payment, under section 73, is this technical service is there? Is it there? Yes. Under section 73 subsection C, the dividend, interest, the technical service fee, everything is in that paragraph. Yes. Now you have to tell examiner, if a non-resident person is earning or the arising or derived a technical service fee, it is source of payment under the Inland Revenue Act number 24 of 2017 and its amendment under section 73 subsection C. Done. Next one, in section 73, the subparagraph 2, it has very clearly mentioned the definition of technical service fee, TSV, technical service fee. Okay, the definition of the technical service fee you have to provide under Inland Revenue Act. Thirdly, Lamai, under Inland Revenue Act, you have to tell the WST rate. Where the WST rates are mentioned for the service fee, it has in the section 85 of the Act. Section 85 of the Act. Section 85 subsection 1B. It has very clearly provided. You can go to the Act and look at these things. Section 85 1B, it has very clearly provided any insurance premium or any service fee to non-resident person. Then it has given the, if there is a service fee, it should tax. Where the tax rate has mentioned, this is the provision. Where the tax rate has mentioned in Lamai first schedule. First schedule, para 10. First schedule, para 10. It's paragraph A, B, C. The third one, it's a, I couldn't remember it's a 3 or it's a B, C. Then anyway, the third paragraph, it has very clearly mentioned what is the tax rate, Lamai. Tax rate is the 14%. Tax rate is the 14%. Clear? Now, it's the analysis of the Inland Revenue Act, analysis from the Inland Revenue Act. Now come to the analysis from the Double Taxation Treaty, Sri Lanka and India, where you are taking first one is from the Article 12, nothing other than anything. Article 12, you have to take the royalties and fees for technical services, specifically in the Sri Lanka-India Treaty, the technical service fee has defined. Article 12, then according to the Article 12, you have to tell the definition of technical service fee. It has given. Then thirdly, in Article 12, you have to quote from the Article 12. Then you need to start from the definition of technical service fee, and thirdly, it has the rate, income tax or withholding tax rate applicable to DTA. It's a 10%, that Article 12 para 2. Article 12 para 2, you have to quote from the Double Taxation Treaty, Lamai. In the paper, all, if it is not mistaken, all the treaties, this particular articles are provided. Yeah, all this article, the 7 has provided, Article 5 has provided, and Article 12 has provided. Then it's only you have to apply. Only you have to apply, then it is the 10%. And again, there is a Inland Revenue Act provision as a 14%. In the Double Taxation Treaty provision, there is a 10%. There is a conflict between the Double Taxation Treaty and the Inland Revenue Act. Apply section 75. Apply section 75 subsection 2. What's the Inland Revenue, the Double Taxation Treaty supersede the Inland Revenue Act. Then accordingly you can apply the 10% as per the Double Taxation Treaty. But if I have come to the practical situation, then you have to take the all these things you have to explain to the International Division in the Department of the Inland Revenue, and in that we need to determine the rate and do the remittance tax and tax clearance also we need to take. Okay. Now this is the withholding tax provisions applicable to service fee. What service fee? Technical services. Then you have conclude your answer with the Double Taxation Treaty in between Sri Lanka and this is the first part of the answer. This is the second part, and quoting from section 75 2, you have to conclude your answer by applying the 10%. That's the final answer. Okay. Then it is for the end of the part 3 discussion, all Roman 1, Roman 2 and Roman 3 on the section 1, question 1, part A completed. Now we need to come for Lamai a different angle of the question, part B. Okay, now the next part of the discussion, this is a separate question on the taxation and business decision making. How many marks, Lamai? For 6 marks. Entire part has tested based on the individual taxation. If I have add one part, resident individual taxation. Now your knowledge, brought forward knowledge is, I am repeating this in every time, brought forward knowledge on the personal or individual taxation is highly important in this level. Okay, because your pillar is a tax and law, Lamai. Then all the areas which you learn past, you should apply it to the present. Okay. Now come to this, assess the, telling the requirement, assess the favorable option that was available to Rohan at the time of appointment in terms of the November 2020. Net take home pay, note, please ignore the EPF and ETF contribution which are the terminal benefit contribution, we have to ignore. Then support your answer with the calculation. Now see, to 6 marks, to you to grant marks, it's very clearly the examiner has provided a guideline. What is the guideline, Lamai? Support your answer with the calculation of tax payable by Mr. Rohan. You have to do the calculation and then only you have to come up with the answer most favorable option. Clear? Depending on whether the two options are given, Lamai, the calculation of the tax payable by Rohan, depending on whether he lives in the company apartment or received the travel allowance and stay with his friend. Now you have to do this part B. This is evaluation of the option, evaluation of options under business taxation and business decision making. The two options given, Lamai. The two options given in that, the option 1. Option 1, it's very clearly given. The first option, whether he lives in company apartment question, and the second one you have to look at receives the travelling allowance, and lives with the friend and lives or stay with his friend, stay with friend. These are the two options. In these two options, you have to do in each option, for this option, you have to do the calculation of income tax liability, calculation of personal income tax, maybe under APIT scheme. Then here also you have to do the same thing, the same calculation of personal income tax, calculation of the personal income tax. And you have to compare in these two answers. Comparing 1 and 2, you need to go for a most favorable option. Most favorable option to taxpayer, the Mr. Rohan. Favorable option to Mr. Rohan. This is your requirement for the 6 marks. This is your requirement for the 6 marks. It's very easy. Come for the information of the question. Here, Rohan joined the Hertax Private Limited in November 2020 and was appointed as the marketing manager of the Colombo district for a period of 3 years. His hometown is Kandy, but as a result of his appointment, he had to be based in Colombo commencing from November 2020. Rohan's gross salary is $260,000 per month with an additional salary of $40,000, altogether $300,000 per month during the 3-year period. Rohan did not want to relocate his family to Colombo for personal reasons and planned to drive home each weekend. At the time of appointment, Rohan was offered the use of a furnished apartment owned by Hertax to live during the week. Mr. Rohan has awarded a furnished apartment to live. The apartment is provided with a housemaid whose salary is rupees 30,000 per month. Lama, if you don't know about the non-cash benefits relevant to the employment income, this your entire option is invalid. Your answer invalid, because you should know about the non-cash benefits applicable on the employment income. In the section 5, it's a part of the employment income. In a separate document, it has published. Then all the housing, why it's important? It's very clearly given in that document. The housing benefit includes the servants providing of the servants. Then if you are computing a housing benefit, lamai, you cannot take the benefit of the servants again. No, it is included in the benefit of the house. It has, where it has given in the document, it has provided. Then if you don't know these things, there is an issue. Therefore, I am highly recommending you to go for the individual income tax under personal taxation. Please look at before the examination. And the details of the company apartment are set out below. Market value as at November 2020 is 12 million. Purchase price is 7 million. The rate in assessment is 500,000 and rates are paid at 20% of the rate in assessment. Monthly contribution required from the Rohan rupees 15,000. See, from these 4 bullet points, only the required the number for me is only this. Monthly contribution required from Rohan is 15,000. Even Mr. Rohan has provided a rent, the furnished apartment. Even Mr. Rohan has provided the furnished apartment. Is it rent-free resident to him? No. There is a part rent is charging from him. What is the amount? Rupees 15,000 is charging from him. Then we have to consider this figure when we are doing this computation. Done. Alternatively, if Mr. Rohan did not want to live in the company provided apartment, Hertex offered to pay him a travel allowance of rupees 24,000 per month. Now, if this option has foregone, then you can go for this one. There is a traveling allowance of rupees how much? 24,000. Traveling allowance of rupees 24,000. Done. To cover the cost of traveling in Colombo every Monday and returning home to Kandy every Friday. During the week, Rohan would then have to stay with his friend, paying a rent of rupees 20,000. This is for option 1. He has to pay rupees 15,000. Option 2, he is receiving, this is plus, and there is a minus of rupees, it's 20,000 as the rent for a, this is minus 1, this is a plus 1, to 24,000 is a travelling allowance, 20,000 is to rent expense with if he is going to stay with his the friend. We will remove this. Okay, done. These are the information provided. Again, was a requirement. Assess the favorable option that was available to Mr. Rohan at the time of appointment in terms. Now see, what's the examiner asking? Is examiner needs to evaluate this for entire year of 2021 or from November to that November, December, January, February, March for that 5 months period? No. Very clearly examiner is asking in terms of a November 2020 net take home. November මාසයෙන් ගෙදර ගෙනියන මුදලත් එක්ක බලන්න ඕනේ. It's only for the month of November. The reading of the question carefully is getting marks for you all lamai. Okay, these questions are not a difficult questions. Only thing you have to read and gather the correct information. Now I am directly coming to the answer. This is evaluation of my 2 options. Then it is first we will come to the option 1. We will come to the option 1. This is part B of the question 1. Part B of the question 1. I need the hard copy of the paper, and it's what is the option 1? Option 1 is the living in the company apartment. Option 1 is the living in the company apartment. Computation is based on month of November. It is the requirement of the examiner. Then I have included it separately. What is the gross salary? Gross salary is 260,000 additional salary there is a 40,000 and housing benefit. How to compute the housing benefit lamai? Beside the answer, please come for this APIT, for the APIT, the 2021, these are the value for non-cash benefits, value for non-cash benefits. This covering under in the Act section 5 under employment income. This is the list of the value of non-cash benefits. Then I am coming to the third para, which is the value of the housing benefit. This is the value of benefits for any resident provided by the employer. The second one, which is the housing benefit. How to compute the housing benefit? Value of any benefit of any place of residence provided by the employer in respective situations should be the market value of the market value is specified as follows, where the market value is if I have taken like this is you need to take the market value if the market value has given and ascertainable. If the market value has not provided, you have to go for the non-cash benefit circular. That's why it has mentioned provided by the employer in respective situation should be the market value or value is specified as follows, where the market value not ascertainable. Always you should go for the fair market value. If the fair market value is not ascertainable, you should come for this document and you need to analyze what's the situation. Now the Mr. Rohan, what is his monthly remuneration? The November 2020 remuneration has given there is a gross salary of 260,000 and additional salary of 40, altogether 300,000. Then each salary is more than 200,000. Here we go. Then monthly non-cash benefit rupees we need to take in a rated area, because this is we need to assume the property, no need to assume the property is in a rated area. While am I in the paper? If I have gone for the paper, see in the paper it has given by the examiner the rate in assessment is rupees 500,000. Therefore, the apartment is in the rated area. Apartment is in the rated area. That issue also concluded. Now 40,000 no 12.5 of the 5% of the remuneration, whichever is less you need to take, because the fair market value of the housing benefit has not provided. Therefore, you have to go for the non-cash benefits. Accordingly, the salary is more than 200,000 and there is a fixed amount of, when taking the housing benefit, there is a fixed limit of 40,000, and then for salary you have to apply the 12.5%. Whichever is lower, you have to take as the housing benefit. But what is the importance in this question? It has given Lama is a furnished apartment. Then the value of furniture also we need to take. It's a 2.5% on the remuneration. The remuneration is 300,000. In that 2.5% you have to apply or 5,000, whichever is the lower amount. Obviously 5,000 is coming. The 300,000 at 2.5% is 7,500 and the limit is 5,000, then you need to take the 5,000. Clear? Based on these formulas, you need to take the housing benefit into consideration. Now I need to come for this one. This is very important, where the value of any place of residence should be considered as the inclusive of any security, housemaids, servants, laundry, etc. Did you see this? In mistakenly, if you have included that 30,000 also, your computations are getting mess. The value of the place of residence, that means this value of the place of residence, it should include the inclusive of the security, housemaids, servants, laundry, all these things. Done? Therefore, we will come to the answer with all these understanding. Housing benefits 27,500 and how I have computed it. The working under option 1, computation of housing benefit as per the value of non-cash benefits, as per the value of the non-cash benefits. It's what it has given in document. 40,000 no, 12.5% on remuneration, whichever is lower. Lamai, why this should applicable? Because the remuneration more than rupees 200,000, more than rupees 200,000 and rated area. More clear now, rated area. Okay, then and since the furniture rupees 5,000 and it's a furniture, then we need to look at rupees 5,000 or 2.5% on remuneration shall be added additionally. Then housing benefits, the limit has given 40,000 in this document, 12.5% of the remuneration is 300,000, in that 12.5%, from this whichever is lower, the lowest value is 37,500. 37,500, and here the for furniture limit there is the 5,000 and 2.5% on remuneration on that furniture part. Then whichever is lower, obviously lower one is the 5,000 as I have mentioned previously. Done. Next one, the total housing benefit. If it is a rent-free resident to Mr. Rohan, total housing benefit is the summation of only these two, the 42,500, but here less amount payable by Mr. Rohan per month for this house is 15,000. Under the first option we have noticed that it's 15,000. Then the total housing benefit to Mr. Rohan under employment income is 27,500 value of housing benefit. Clear? Now we need to add this to here. Housing benefit 27,500. Total assessable income from employment is the amalgamation of these. Then this is the value in rupees. After that, you need to take the tax-free allowance of the individual under the relief. This is a tax-free allowance. It's 3 million per annum. Then per month it's 250,000. 3 million divided by 12. Per month is 250,000. The APIT table designed in this manner. Then there is a taxable income of the Mr. Rohan, which is assessable income from employment, less tax-free allowance. The tax-free allowance is Lamai. This is the relief for there are for individuals we can deduct reliefs and the qualifying payments. The one of the relief is the tax-free allowance. Then is 250,000. Then we are having the taxable income for Mr. Rohan for the month of November, 77,500. Then gross tax liability is 4,650. For individuals, there are in a progressive tax rates. Tax slabs are there. First 3 million at the rate of 6%. Next 3 million at the rate of 12%, balance at the rate of 18%. Then the taxable income from the employment, which is the as per given information, Mr. Rohan, it is within the first 3 million threshold. Then the applicable rate is 6%. Thereby the income tax liability is the 4,650. Clear? Now, do we need to stop from there? No, we need to, it's very clearly given in the question. You need to compare what Lama, it's the amount of take home. It's very clearly given in terms of the November 2020 net take home pay. ගෙදර අරන් යන ගාන අපි බලන්න ඕනේ. That's the key decision factor for us. Then total employment income, which is only on the cash basis, it's 300,000. because lamai I have not taken the non-cash things, because here you don't have non-cash benefits, all are cash benefits. Then to comparison to have in a particularly equal manner, I have not taken a non-cash benefits. Then employment income, this is if you really need I will write, this is on a cash basis. Cash only the cash benefits. Cash benefits done. Then less income tax payable 4,650. Other than that, you have to definitely pay rupees 15,000. For take home from the salary, you have to pay rupees 15,000 lamai. Then the net salary is what you are, the take home is 280,350. Done. Then the next one lamai, next option, option 2, receives the travelling allowance and stay with his friend, the second one. The gross salary 260,000, additional salary 40,000, same. Now additionally he is receiving rupees 24,000 as a travelling allowance, no housing benefits and nothing. Total assessable income from employment is a summation of these three. Tax free allowance, the same thing, is a relief per month 250,000, I have explained it. Taxable income is 74,000, gross tax liability at the rate of 6% 4,440. Then employment income is a summation of all cash benefits, this 324. Then less income tax payable 4,440. The rent paid to friend, there is a cash outflow from him rupees 20,000. Then it is the net salary of 299,560. Now what's the best option? Option 2 is the best option. From here it is 280,350 net pay. This is the net salary, and for option 2 net salary 299,560. Then most, we need to go for a evaluate of options. We need to go for a most favorable option to Mr. Rohan. Favorable option is the option 2. Come to the answer. The before recommendation, I need to come for my assumptions or notes. These are the notes for my computation. For comparison purposes, only cash benefits were considered because the both sides should be in the equal terms. Second one, both computation done on monthly basis. That's a requirement of the examiner. This is the requirement of the examiner. Provision of servants is part of the housing benefit and no need to add again to the employment income. That's from the circular. The document, other than tax-free allowance per month, no other relief for qualifying payments available for computation, no information provided. With all these facts, now we will come to the recommendation. Recommendation, net savings against the option 1 from option 2. Net savings against option 1. Option 1 we have only 280 take home birth. For second option we have 299,560 take home birth. Then altogether we are having a net benefit over the option 1, which is 19,210. If we have compared it by way of the housing benefit only, here the 27,500 and here the travelling allowance of 24,000 we are receiving. With reference to the housing benefit, even here he has to pay as the rent 20,000, here he has to pay as the rent only 15,000. Even there is a 5,000 additional payment for the rent if we have gone for the option 2, but the option 2 is the most favorable option to Mr. Rohan. The benefit is 19,210. Therefore, my recommendation based on the calculation, nothing other than that, based on the calculation, the recommended option is option 2, which is obtain the travelling allowance of rupees 24,000 and stay with friend. Okay. This is the evaluation of the two options. Evaluation of the two options, and telling the most favorable option based on the calculation. Okay, lamai? Then let me again go for a PPT. Here we go. Then this is the end of the discussion of the question 2. Sorry, the section 1, question 1, the end of the discussion, all part A 3 parts and part B, that particular 6 marks question we have discussed. Okay, please go through these areas and please prepare for your examination. I will meet you again with the discussion of the question 3. Thank you very much.